Hey everybody, good weekend. Here's Doc with your Market Minute for Saturday, the 3rd of February. I'm going to keep this one quick today because it's not really all that difficult to see where the trend is and the price performance every time that we see any kind of meaningful pullback. Even though it's very shallow, we end up with a price making new all-time highs. And after we've gone to a quicker fractal, this is making just a little bit more sense. I was thinking that we'd go back into a 14 fractal, but this is just moving too quickly. And so anytime that we get any amount of weekly energy, we're taking this daily chart and using all of that to power ourselves to the next high. So all of this is range expansion, range contraction, range expansion, range contraction, even if it's just 2 days, and then range expansion again. So this is all very linear. This is all very typical for a primary bull to the upside. Now, there is a warning that we're starting to see, and I want to emphasize that this is just a warning. This is not a tradable signal. So I'm not trying to tell you guys to go short on Monday. It's just to be prepared for a potential modest correction. I don't think that we need necessarily to go into a full 10% correction again, even though we just went through one last summer. Now, here's what I'm saying. This comes through stockcharts.com, and the ticker symbol for this is $SPXA200R. So this is the percentage of stocks in the S&P 500 which are above their 200-day moving average. And so it's no surprise that on Friday we made new all-time highs, but what we're seeing is we're seeing a lower high setup on the S&P 500 chart. And this has been happening now for a couple of weeks. Now, that by itself is not a signal. That is a negative divergence that's showing that there are fewer and fewer stocks that are in primary uptrends as we print new all-time highs. Now, quite honestly, we've seen this again and again and again over the past 10 to 15 years on the strength of these mega cap tech stocks. And it happens for a long time. And we can see this happen for a long time. We can see a series of lower highs setting up for, it could happen for weeks, it could happen for months before the actual correction arrives. So this is why I'm saying it's not a tradable signal. It's just more of a warning that we are starting to see Class A divergence setting up on the S&P 500. So those Mag 7 stocks are coming off some pretty good earnings, especially the ones that came out Thursday night into Friday's reaction. And so there's probably going to be some momentum on those for a little time to come, but all it's going to take is the wrong catalyst at the wrong time, which is going to serve as the catalyst for people to take profits. So again, what I'm not saying here is to go short on Monday. It is to understand where your risks are, especially if you have a long portfolio, and start to identify places to either take profits or to hedge those positions with some short deltas, such as long puts or however else that you want to do so. Other than that, let's keep it simple and play along with the trend. That's today's Market Minute. Thanks for listening. We'll see you in the next one.